Hello, welcome to the second video in Nonprofit Finance Fund series, Understanding NFF's Lending Process. In this video, we'll share what you need to know about reviewing a loan term sheet. At this point in the loan process with NFF, you've had a conversation with our loan origination team, and you've sent over all the information that we've asked for. You might have had a follow-up conversation there as well. All that has gone well. The relationship is off to a good start. And then the loan origination team has brought in an underwriter to do the next level of review and due diligence. Based on the underwriter's initial analysis, which they've conducted in conversation with you, the underwriter has determined that a loan from NFF might be possible, so we create a term sheet. The term sheet is a document that lays out what NFF is comfortable offering your organization based on the information you've supplied so far. We still need to verify a lot of your information, so the term sheet is just a preliminary and non-binding commitment. There's no obligation on your part or ours to move forward if additional analysis shows that it's not a good fit for either party or if circumstances change. So what is in a term sheet? A term sheet outlines the loan size, which might be different than what was originally requested, the loan structure, which is when and how the money is lent and when and how you pay it back. Loan term, which is the period of time until maturity when the loan has to be fully repaid. It locks in an interest rate for a period of time. So if the loan takes longer than that to close, then the rate could change. It will include any prepayment options or penalties or other fees, like an origination fee or a prepayment penalty. It outlines closing deliverables, like the legal documents that both parties will need to have before any payments can occur. And if there are other conditions to the loan, like a guarantee, then those will be outlined in the term sheet as well. So once NFF provides this, then you schedule a call with your underwriter at NFF to go over the term sheet with you to make sure you understand it, to answer all of your questions. Our goal is the same as yours as the borrower, to make sure you understand everything that is laid out in the term sheet. If that's agreeable to you, then you sign the term sheet, and in most cases, you'll pay a good faith deposit, also sometimes called earnest money, which is then applied towards the closing fee when your loan closes. If there are any terms that you want to change or that don't seem feasible, it is absolutely okay to negotiate and advocate for those changes. Some back and forth is totally expected, and it's much easier to make adjustments at this stage than later in the loan process. Ultimately, NFF's goal, the underwriter's goal, is to develop a loan structure with a repayment schedule that matches the nonprofit's revenue streams and has manageable repayment terms. The best loan structure is one that your organization will be able to repay. So we welcome questions about things that might make managing the loan challenging, so we can work through them with you. The timeline for this part of the process is usually between 1 to 2 weeks. Okay, so now we're going to see what this looks like in practice. We have with us Sal, the Director of Finance for ABC Nonprofit. Sal, along with his board and leadership team, came to NFF asking for a $1.5 million line of credit to help manage cash flow for an increasing number of government contracts, which pay on a delay. Sal filled out our intake form, had an intake call, sent over his due diligence documents for ABC. And then we also have Lenola, an underwriter at NFF. And as an underwriter, Lenola conducts the deep analysis to understand the organization. She does the due diligence and then crafts the loan terms that will work best for both parties. At this point in the process, Sal and Lenola have already met a few times. They've had a few conversations. Lenola has combed through all the information Sal has sent over and conducted enough analysis to write a draft term sheet for a $1.4 million line of credit. This is less than what Sal originally asked for, but it is aligned with ABC's needs and its receivables, which are used for repayment. Sal and Lenola have already talked about that change, and now they're on a call to discuss the draft term sheet. So we're going to show you a snapshot of that now.
Hey, Lenola. It's good to see
Hi.
you again. Thank you so much for sending over this draft term sheet on the line of credit that we're exploring with NFF. I've reviewed this with our executive director and our board finance committee, and we've gathered some questions just so we can really understand all of what this means for ABC. So just hoping we can go through those today.
Of course, ask away.
All right. So I'm gonna just share the term sheet that you sent over, which I've kind of marked up a bit.
Perfect.
Okay, so my first question is related to this word revolving. And it says nonprofit finance fund is pleased to provide this term sheet for a revolving line of credit of up to $1.4 million to bridge payment from government contracts. I just want to clarify and make sure I understand, what does revolving mean exactly?
Right. So a revolving line of credit works somewhat like a credit card. You can access a certain amount that you request to borrow, pay back, and borrow again as long as you stay within your limit. It's like a flexible ongoing loan, but unlike a credit card, a line of credit will only be available to you for a fixed term. So in this case, 1 year.
Okay, thank you. That's kind of what I assumed it meant, but I just wasn't familiar with that terminology. So another thing I was curious about is this legal fee of $5,000, and just wondering if you can share what this covers.
Right. So the legal fee covers NFF's in-house legal representation. This estimate is based on the complexity of the loan, so it could be more if we need to hire some external counsel. And one more thing, this is pretty important. We strongly encourage you to have your own lawyer to review the loan agreement and the other closing documents. And so just to be clear, that legal fee listed in the term sheet doesn't cover the legal costs for your own organization for ABC. So you're going to want to hire someone who understands the loan terms, can represent your own best interests. If you're worried about those costs, then there are some network organizations that can connect you to pro bono or legal counsel. Happy to send them over to you if that's helpful.
Okay, great. So it sounds like this the legal fee in the draft term sheet is more of an estimate, and we'll need to budget for things like legal review on our side. This wasn't really something we originally planned for when we first were looking into this line of credit, so it's definitely something that we'll plan for now. And if you have any resources around pro bono legal counsel, that would be really appreciated.
Yeah, absolutely. I'm going to include that in our follow-up email.
Okay, thanks so much. So my next question is related to security or collateral. And I know this basically means that a lender needs something to fall back on if we can't repay our loan, but we also don't own any real estate. So I'm not totally sure how this works.
Right. This is a very good question. So the collateral that we need for the line of credit, it's going to include all of ABC's assets. So any property that you own, including any equipment, inventory. In your case, it's mostly just going to be accounts receivable.
Okay. Yeah, it's helpful to know that this covers more than real estate. And I'm also wondering about UCC1. I should maybe know what this means, but if you could just explain a little bit more about what that is.
Yeah, you don't really need to know what UCC means. It stands for Uniform Commercial Code. It's a lot more important to understand what it's used for. So it's kind of like a database that lenders use to see if any other lenders or banks have claims on assets. So just to simplify that, put it in another way, if an organization has already pledged assets as collateral to somebody else, this is where we go to see that.
Okay. So yeah, since we don't have any existing debt today, I guess I wouldn't expect anything to show up there for us, but this is good to know for any potential future loans that we might seek out. So yeah, I also wanted to spend maybe a few minutes talking about the advance rate and the borrowing base. So it says that the advance rate is equal to 80% of our eligible receivables. And then the borrowing base defines eligible receivables as those that are aged less than 90 days. Can you just provide a little bit more detail so I understand these clauses?
Yeah, absolutely. This is a very good question. So we look at your receivables to determine how much you can borrow. Those are contracts that ABC's invoiced for, but you're still waiting for reimbursement. So once those contracts pay, you're going to use those funds to pay down anything that you've borrowed from your line of credit. The borrowing base is the full amount of your eligible receivables, meaning those invoice contracts that are 3 months old or less. You can borrow 80% of that total up to a maximum of $1.4 million, whatever's less, whatever's smaller. So if 80% of your eligible receivables comes to more than 1.4 million, you can only borrow 1.4 million. But if 80% of your receivables are less than 1.4 million, you can only borrow up to that smaller amount. I think it might be a little bit easier to run through a couple of scenarios to illustrate what I mean. Let's say you were extremely busy and had 3 million in contracts invoiced last month. Since the advance rate is 80%, that's 2.4 million. Because 2.4 million exceeds the 1.4 million credit limit, you're able to borrow up to the full 1.4 million. Let's say you do that. Now, in the following month, your receivables go down because some of those contracts paid. Your eligible receivables drop to 1 million. So 80% of that is 800,000. That becomes your new borrowing limit. So if you still have 1.4 million outstanding on the line, you need to make a payment to bring your balance down to $800,000 or less. Fortunately, you still have the cash to do that because those reimbursements came through. Does that make sense?
Yeah, I think so, but let me just make sure I understand. So basically, this means as long as I have 1.75 million in receivables, I'm able to borrow the full amount of this line of credit, the $1.4 million line of credit. Is that accurate?
Yeah, exactly. As long as those receivables are less than 90 days old.
Okay, this really helps me just understand how much we'll have access to from this line of credit at different points over the year. And I might have other questions later or in the future. So if you could send these slides over so we can kind of test out some other possibilities and scenarios, that'd be helpful.
Yeah, absolutely. I'll send it over after our call.
Okay, just wanted to switch back to the term sheet. And just also, want to make sure I'm understanding everything related to this cleanup clause. And it says the borrower shall repay the entire outstanding balance amount of the loan and maintain a zero principal balance for 30 consecutive days over each 12-month period that the loan is outstanding. So this means that the line of credit has to be repaid for 30 consecutive days over any 12-month period. Is that right?
Yeah, absolutely. You're going to need to plan for the cleanup at some point in the year. And that's best to do using those monthly cash flow projections. I saw in your quarterly projections that you have a large grant coming through in the third quarter, if I remember right. It's not clear to me whether you're going to be receiving that at the beginning or the end of the quarter. Our loan originator, Brittany, told me that you're working on monthly cash flow projections, right?
Yes, I'm converting our quarterly cash flow projections to monthly projections, and I'm using that template that Brittany shared. I'll send that over to you tomorrow. But we really want to save on interest expense. So we're planning to pay down the line of credit whenever we can. So we'll be able to do this at least 2 to 3 months per year. Does that count, or could that count as our cleanup period?
Absolutely. That's exactly what it's for.
Okay, that's good news. So I'm also curious about this good faith deposit of $3,500. Would this deposit be refunded to us if we did not move forward with this line of credit from NFF?
If we can't obtain approval for your loan on our side, then yes, the deposit's going to be refunded net of expenses. However, it will not be refunded if you withdraw your application or if we get the loan approved, but you decide to not move forward with closing.
Okay. I think this kind of covers the questions I had for today, but this has been really helpful to keep all of this in mind through the process.
Perfect.
Sal and Anola talked for a while longer. This was just a condensed view of what reviewing a term sheet for a loan could look like between a prospective borrower and NFF. I want to call attention to a few things that Sal did that we encourage you to do. First, he wasn't shy about what he didn't understand. After Lenola answered his questions, he often rephrased or summarized her answer to make sure that he understood. And we call attention to this because it's a really good strategy to practice in any of your conversations with lenders. If you've watched our other videos, you've heard us say this before. We are always happy to answer questions. All questions are good questions in this process. It is better to understand all aspects of the loan you're seeking as early as you can than hold your questions because you're afraid of, or you're nervous to ask them. If the answer you get is confusing or full of jargon you don't know, then just ask for clarification. That's always welcome. That's it for this video. We hope it was helpful. If you have more questions or want to learn about the other steps in NFF's lending process, we encourage you to check out the other videos in this series.